Morning, Anchor. Hey Ryan, how you doing? Hey Joe, how are you? All good, just reviewing some PA and going over some back testing as usual. Indeed, grind continues, grind continues. Recovering from flu, but good. Hope you're feeling better. Hope you're feeling better. The weather's great, so let's have a look at some charts, shall we? Right, so NFP day. Again, you know, a lot of people make a big fuss of it. NFP day, oh, we need to sit there trading it. No, we just wait and see what the markets kind of do. You know, what's my expectation or what am I anticipating? Well, you can all remember from the weekly watch list, if you're in the live premium membership, this was the key area where I said the dollar was going to have a retracement from. You can see we perfectly mitigated this daily area of supply. Rejected off of that 50%, and now we've kind of aggressively started to push to the downside. Now, you know, where's price bouncing off of? We have this level of demand here on the daily where price is bouncing off of, but we can quite comfortably see, you know, price has started to head off to the downside. Now, you know, over the coming week or two, we could expect price to continue down. Now, NFP today, we could see a bullish number from the dollar, which could cause price to retrace, and then eventually we could start to see price heading back to the downside, and that probably makes sense for the likes of I saw your analysis, Ryan, on Euro USD, and I'm kind of the same mindset. You know, we kind of look at this, and the current structure that we have is we had this retracement, and then we kind of just fell to the downside. Now, again, my expectation of, for example, Euro USD is for a longer term price action to the top side, you know, because this was the daily pullback area. As we had the daily breaker structure, we came perfectly into our fib retracement into that area of demand, and then you could see we bounced off this zone perfectly. But we are obviously due a retracement after this big rally we had. So we had our M15 change of character here, and then we've just kind of had this big push to the top side. Now within this fib zone that I've marked up, we do have this area of supply that's unmitigated up here. So what we could see is, now typically, you know, we're going to see this pre-NFP, that's just the nature of it. Now we could see price bullish numbers coming out for the dollar and price sweeping liquidity and then kind of making its way back down to eventually continue pushing higher. you know, because again, the daily is overall bullish, the daily pullback is complete, the M15 is shifted, so we're not expecting just a 4 hour pullback, we're expecting price to kind of continue much higher from this point. Now, price left behind lots of areas of imbalance and inefficiency. If we kind of look at this region here, we could see we have an area of unmitigated demand here. We do have some imbalance and inefficiency down here with an extreme demand zone. We do have this area of demand, which again, for me, that's personally early inducement. So we could definitely see price heading back down towards these areas before the next push up. So I'm more inclined on buying this market once price gets back into this. So I'm not interested in any FOMO trade of I have to catch a trade today. Hey Curtis, hey Damien, will the dollar rise? Good question. It really depends on what perspective you're looking at the dollar. Are you just trying to sit there looking at the dollar for here and today? If you are, then yes, we could quite well get a retracement on the DXY. But over the coming week or so, my personal expectation is for the dollar to continue bearish. Remember, the news isn't going to dictate the overall direction in where the dollar is heading. The technical analysis has already factored that in. All the news is going to do is either allow price to have a pullback and have it much quicker with volume, or continue heading in the direction it's heading in. So it's not that, oh, NFP is going to all of a sudden reverse the dollar from what it was going to do, you know. So we could see a pop after this aggressive sell-off yesterday. So if the news does come in strong for the dollar, you know, you don't want to be blindsided and think that is it, dollar to the so-called moon. We could see a push to the top side for the dollar, and that just means the likes of pound USD, all of these pairs that have had this quite a substantial rally from yesterday, will just have some pullbacks, and they might seem aggressive, they might seem, oh, you know, huge sell-offs, but in my personal opinion, they're only going to be pullbacks to eventually continue in the direction that price is heading towards. So Euro USD again, you know, typical price action pre high impact news, building liquidity to both sides. You know, now if you are like itchy fingers and wanting to, like, if there's dollar strength kind of coming in, you kind of want to see some sort of structure created and a shift to then start to short and trade that pullback. Right now we've not created no structure. You could see price is just pretty much sideways, you know. So you kind of want to see a shift. So I at least want to see price mitigate that area of supply, and then if we start to sell off and kind of get a pullback, then we can look to start shorting. But until that point, there's nothing. And if the news comes in weak, then this could just break through and continue higher, and then we will revisit next week and reanalyze what the market kind of looks like. So, you know, NFP news itself, there's nothing specifically to sit there trading. It's just planning things out and then waiting to execute. So like I said, the high probability trade, Euro USD, pullback buyers, because we've already done our analysis on the higher time frame. You know, we're on a weekly pullback after a weekly breaker structure here. Where's our weekly high? There we have our weekly high. There is our weekly low. So we're in that retracement phase. So if we're in that retracement phase, you know, the daily pullback is complete here. As we can see, we created a higher daily pullback. So the natural course of price is to head towards the top side and to take out the previous daily low, which is sitting up here. So higher time frame dictates what we're expecting, and it's not a coincidence. You know, if you go back and look at news yesterday, news was actually pretty bullish. Like ADP non-farmer was above, you know, it was green for the dollar. Unemployment claims were below than expected, so the unemployment claims weren't higher than expected, so That's strength for the dollar, because that's indicating to FOMC members that employment is still pretty strong, because unemployment claims are lower than expected. ISM came in pretty much as expected, and ISM manufacturing prices came in below. But broadly, the news was pretty strong, and the day before, JOLTS jobs came in above expected. So all of these things are pretty strong for the dollar. But why did we see such a massive rally for other pairs? Because from a technical perspective, the dollar was in an area of pullback, so we saw that aggressive selling. So it's, you know, it's important to understand these things and keep that higher time frame under analysis intact, and not just to get caught up and lost with what you're seeing here and now. Similar thing on kind of GBP USD. You know, now GBP USD, you could see we had some more strength. So, you know, what do we see on the GU? Now, we entered a daily pullback. On the euro, we've had a daily pullback. On GU, we've not. You know, we've kind of come down to this area of demand and then started to push off to the top side. Now, on GU, you know, we have this 4-hour area of supply where price is not yet mitigated. So if we kind of start looking down on that from an M15 perspective, we had our last break over here. So the current range that we've been working with is this low to the current high. Now you could see within this, we've got sideways price action. We have perfect unmitigated area of demand. Now we have demand over here. We have demand over here. We have imbalance and demand over here. But we have this extreme demand with this area of imbalance again. Now, you know, all of these areas are, in my opinion, early inducement. That's the area of demand that I'll be waiting for price to come back to. Now, again, you know, typical criteria. Look what price is doing. Pretty much sideways. Is there a trade? No. You sit there trying to trade NFP. All you're doing is gambling, because we've had this such overextended move. Which way? Where is your rules and where is your analysis? What is it telling you? Which direction is price heading? You don't know. You know, so stick to what you do know, stick to your rules, be patient, and just wait for the trade to come to you. Similar kind of scenario on gold. Now, I got a position this morning. Now, again, the only reason I caught this and I went in lower risk than I normally would, because as you could see yesterday, price had a pullback. We then marginally created this new high, and then we had this area of demand. Now, you know, if I look at price from a higher time frame perspective, is price due a 4-hour pullback? Yes, it is. You know, we had a 4-hour change of character here, and then within that, we've just had our M15 structure, which is something like this. Sorry, let me just remark this up. So we had a break of the lows, a pullback. We had a break of the previous lows, a pullback. Then we had a break here, pullback, and then we had a breakdown here. Now we're in that retracement phase. So if I go into the hourly chart for a second, you could see we kind of had this big move to the downside, and we've had a retracement. We have this area of supply here where price kind of tapped into, hit that 50%, and then we had this internal kind of pullback here. So once this pullback happened and we created this new high, you can see on the 15-minute we closed above. We then created this area of demand. As price came back into this, it tapped into the 50%. I was like, right, okay, you know, London, just after London open, I was like, right, you know, I can at least look to trade this back up into this area of supply, because price could roll over from this point, or it could break through and continue higher. So again, if strong dollar news, we could expect a pullback from this area. Now, you could see we've pretty much had this massive push to the top side, So if gold does start selling off, what do we have here? Again, lots of liquidity built up in this region here. Lots of liquidity below this. We have this area of demand, but again, early inducement. We have a perfect area of demand that sits within this, and we have some inefficiency here and an area of demand below here. So I would not look to buy this until it at least got down to like 1946 or like 1938, that kind of region. So price is in a perfect area to potentially sell off. So for me, it was taking lower risk and just trading back up to an area of supply, knowing that we are in a high time frame supply, but currently price action is bullish, and we create this nice strong area of demand to react off of. Yeah, so M15. So if we kind of go over here, we originally had, you could see over here, you could see we had a closure above. So this was our low. So when price came down, we had a pullback. We marginally created a new high, and then we had our change of character here. We then had our retracement here, and then we could see we got a closure below here. So we then had our next push to the downside here. Now if we mark this up, so price, this pullback here is not really valid because price doesn't come into that 50% retracement at least. So we had this big push to the downside without any real retracement, and then here we do have a retracement, even though incomparable to this move down, it's not much, but it's huge in terms of a pip count. It's like 300 plus pips, so we can't ignore that. And then from this point, we then create this push down. Now here you could see when price pulled back somewhat here, it wasn't a deep enough pullback in comparison to this original move down. You could see price didn't even reach equilibrium. So this became part of the internal structure. So here, there was our high and there was our low. So currently that's the range that we're working within. We're working within this high and this low. Hopefully that makes sense. Now what I would much prefer is price to like break above this high. So then if we get a retracement back into this area, it's higher probability buys, or if price pulls back, because then we've had a shift in market structure by breaking this. So if we then break this, where's the 4-hour pullback? You know, we have lots of liquidity resting above here. We have this area of imbalance with this supply. We then have lots of liquidity resting above these highs, and then we have our area of supply, which aligns nicely with our 4H pullback. You can see that there, and above that price is pretty efficient. So we could then see if we get a push above this and a pullback into here, we could then look to start buying price back up into 2030, 2040, like the 2035 region, before we see the next push to the downside. Now again, you know, is price going to do much while we're pre-NFP? No, we could probably just expect price to be pretty sideways on whatever pair we kind of look at. GJ's in that key area of selling off, as I kind of mentioned last week, actually earlier this week. We had an M15 break above, we had a change of character, price then reacted to this area of demand, and we've just come into the extreme. You know, you could see this kind of had this. So price has been pretty messy, in all fairness, over here, and then we had this push up. If we look at the 4H, price reacted from this area of demand, but there's no pullback here. You know, price is pretty much just came down, and then it's just like we've had this break above, but it's just weak and it's messy. So we do have this area of supply where price is failing to break above. Now if we can get some sort of a shift, currently we had that push up, we had this pullback, we then had this push up. This is kind of, you know, somewhat internal. I'd like to see a nice flush here and then a retracement to start shorting. So we'll see if it does do that or if it just continues breaking up. It has been pretty messy, to be fair. AUD USD pretty much. So we could see now price hasn't mitigated this 4-hour zone. But what it has done is it's tapped the daily. Now, if you look at price, we could perfectly see we wick into that, and there's our daily area of demand. Now I just refined that down to a 4-hour zone, and we haven't yet mitigated the 4-hour point of interest. But what we can see is, you know, we're pretty nicely in a 4-hour pullback. You know, where's our 4-hour high? We have our 4-hour high here. We currently have our 4-hour low here. Have liquidity resting above these highs here. We have this perfect area of supply here for price to pull back into. So we could see if price taps into this retracement back here, we could continue looking for buys up until like 0.67800, and then price could come down to mitigate this 4-hour. But remember, on the daily swing, price has tapped into the daily demand here, so we could see a 4H break to the top side. But again, you know, we'll just manage that based on our 15-minute structure. If the 15-minute right now, we can see, you know, we had our so we've had our shift in market structure. You know, the change happened there because here was our M15 break to the downside. Where did that come from? It was the highest point here. You know, we have our M5 structure kind of coming to the downside. So now we currently have our M15 structure. So if we look at this and we just mark up the area of supply where price is, we could perfectly see we have unmitigated areas of demand that rest within here. You know, we could potentially see price come to the extreme because we have some equal lows here. So we have some liquidity resting below here and some imbalance. So I wouldn't be surprised if price came all the way down to here. I'll still look to buy the next push to the top side. You know, I'm not interested in buying this anywhere from any of these demand zones. Price has to retrace back into this area. Well, it doesn't have to. If it doesn't, I'm not interested. If it does, then I am. And we have key levels, like I said, perfect area of supply at 0.67800, nice round psychological level where price can pull back into. Now, news-wise, if we kind of look at news, you know, what is the news we have today? We have average hourly earnings. So that came in higher than expected last month. I personally don't think the actual unemployment change is going to be a big factor. I think, you know, if we look at that, unemployment change has been hitting every month for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months. The unemployment change NFP number has been hitting. Last month it was 253k actual versus forecast of 181. This month it's a forecast of 193. If you look at what Jolt's jobs is looking like, you could probably, without even seeing the news come out, expect that that number is going to hit. I think what's more significant is going to be the unemployment rate and the average hourly earnings, because, you know, unemployment needs to increase in order for that to help cool inflation. And last month the forecast was 3.6%, and it came in actually at 3.4, so it came in lower than expected, which is obviously uh, a bullish scenario, because that just means if the unemployment rate is lower, they could still continue increasing interest rates without it really affecting people too much, because if people are in work, then they're anticipating people can still afford these rate hikes. Danto, I saw you were drawing up structure earlier. Do you have an objective parameters for deciding what constitutes a lay? Absolutely, I do. You know, it's stuff that I kind of teach. It's all mechanical in how I read structure, whether it's the daily structure I'm reading, whether it's the 4-hour structure, whether it's the 15-minute. You know, those are the typical time frames I'm kind of looking at. You know, yes, you got your weekly, daily, but the time frames that I play around with more is the 4H, 15-minute, and 5-minute. 5-minute or 3-minute really just depends on where I find a better entry. But yeah, absolutely, you know, and that's a really good point, because that's having a defined set of rules to understand market structure is probably 75% of being a successful trader. This quote unquote strategy, which is your entry model, is the easy part, you know, because you could have an entry model, but if your understanding of market structure is inaccurate, or whatever you perceive to be a swing structure or internal structure or a breaker structure or a change of character, if you haven't back tested that and seen how that works, and how structure fits within structure, because obviously if you're looking at a high time frame, lower time frame will be a trend, and a higher time frame will be a swing structure. So if you've not got a mechanical way of reading that and back testing it to see how that plays out, then an entry model is pretty irrelevant, because you'll just be on the wrong side. Your entry model might be correct, but if you're on the wrong side of the market, then the entry model is pointless. So the entry model, the quote unquote strategy, is, you know, I would probably say is about 25% of your overall trading system, and your ability of correctly reading market structure is like 75%. And too many people just watch YouTube videos of higher highs and higher lows and lower highs and lower lows, and it's like those diagrams look so nice and easy, but the reality of it is on the charts it's not as simple as that. Okay, that was GU doing. GU, nice early, probably nice early inducements, sweep out all of the lows. I'll share the Discord, guys, and if you're not in, you know, feel free to join the Discord. It is free to join. So if there's any specific pairs anyone wants me to have a look at, feel free to drop it in the chat and I'll take a look. So yeah, I was saying predominantly what they really are going to want to see is the average hourly earnings coming down. No, sorry, if the average hourly earnings come in higher, or because the last month the forecast was 0.3%, it was actually 0.5. But if the unemployment rate is still low, if it's below 3.5 or 3.5, I think that's just going to be strong for the dollar. And that will just give a bit more indication that potentially we could see another 25 basis point rate hike. Which currently, remember, the markets, this rally, when price was doing this, the expectation was that that's it, we're going to pause. Here, the market is anticipating, with all the positive news, that we could see one more rate hike. Thanks, I'll keep an eye on your rules and how you apply them. I personally use body breaks. Yeah, listen, the beauty of trading is, you know, there's not a right or wrong. There's not a right or wrong way. You know, whatever works, you know, as long as you spend enough time testing it. Like for me, anything above a 15-minute chart, I have to see a body closure. Anything lower than that, I'm happy to take a wick break. You know, there's lots of different variations. As long as you have a system that you can comfortably backtest and you have a large sample size of data that replicates and gives you the positive results, then great, run with that. You know, that's what you need. So yeah, so all of this has really been the market preemptively looking at the data coming in and saying that actually we might not get a pause, we could get another 25 basis point rate hike. Bear in mind that if the 25 basis point rate hike happens, that's probably most likely going to be the last one. You know, I can't categorically say it's going to be the last one, but it's most probably going to be the last one because rate hikes take time to take effect into the market. So longer term, dollar weakness is imperative. It's going to happen. You know, you look at the weekly chart on the dollar, we've been rallying, so we are most likely going to see a deeper correction than what we've currently had. All we might get is if we get a 25 basis point rate hike, we could see a deeper pullback into the dollar before the next push to the downside. So, but fundamentally, longer term, the dollars, you know, you scale back, you could see that what's the dollar been doing? Lower lows and lower highs. So price came back into the extreme. And I'm not saying we're going to go all the way down here, but we have been in a downtrend. All of this has just been a pullback off of this massive sell-off, and we've come into that extreme. And even if we're looking at the current swing, we're definitely due more downside longer term. But if we do get a 25 basis point rate hike, we could see this break out and come in to fill out some of this inefficiency above. So, you know, it's super important understanding that, you know, and again, you know, why did I call this area as a pullback? Because we had this shift here, we had this massive move, high time frame supply, which is going to be the area where price has a pullback from. Price isn't just going to do that. You know, we could nicely see this and then see that if that 25 basis point rate hike happens. So if, regardless of news, in my opinion, if it's bullish for the dollar, we could see a retracement here and then see price continue to do this. And then if our NFP, if our FOMC, we do get a rate hike, we could see price start to push to the top side. Just going to delete my trade. That was done. Now again, the good thing here is, you know, we did create a high here. We did get a pullback. We did create a new high. This pullback is not really valid because price hasn't really done anything. We're just internal. But if we get a shift down here from a higher time frame area of supply, retracement could be nice to look to continue shorting this back down into areas of demand. But again, you know, patiently wait for that. Don't need to jump into anything. You know, this is just a typical scenario. If we created a higher high, higher low, higher high, higher low, this could be a lower high and boom. But we don't want to be part of this. We want to be a part of once the market gives us direction. If we get that. If we don't get that and price breaks out of this, then we'll reevaluate. But typically, so the last NFP result was the 5th of May. You know, so let's go back to the 5th of May and let's see what happened. Now you could see 5th of May. Here was news, guys, right? $1.15. This is our 130 candle. So bullish news for the dollar. Boom. We got this massive sell-off, and then we got retracement, and then price start to sell off. So here's our last NFP. So you could see what price did, you know, when we had strong dollar news. So what's the likelihood? You know, it's perfectly primed in a higher time frame area of supply. It's not a coincidence. Price is here. Again, we could see that aggressive sell if the news comes in strong for the dollar, for then price to do that. But again, like I said, gold could still continue down because there's our high and there's our low. So we've not broken above. You know, we've kind of created its equal highs here. We've created. Go across. Marginal break, but it's not a good enough break. Not convincing enough break for us to be really classifying that as a break of structure or change of character to the top side. Now again, you know, if we go back to, can we see that on the 5-minute chart? Now you can see, right? And this is where it's about being patient. You could see we had a massive sell-off. There's no opportunity to get into that. But you know, I managed to capture buys within this kind of space because I knew what area of price action I was trading. And then when price kind of came back into this region here, you know, perfect pullback, and then price started to sell off because at that point price shifted bearish, so we kind of knew. So where price is currently, similar kind of scenario. Gold is bearish. Everyone's probably getting caught up and thinking, oh, bullish, bullish, bullish. Now again, I'm not saying if the news comes in weak for the dollar, we could see gold rise. But the probability is probably still stacked in the favor of seeing gold sell here based on higher time frame. And again, it's not a coincidence that gold approached this area and it's now floating around a significant area of supply. Again, if there's any pairs or any questions anyone has, feel free to drop them in the chat and I'll happily reply to what I can. AUDCHF, yeah, we can. So AUDCHF perfectly reacting off of that weekly area of demand and that weekly pullback zone we had. You could see we had this daily area of supply here that price kind of reacted to. So ideally what you'd want to see is a breakout of this and then a pullback, and then we could look to start trading this back up pretty nicely. So you could see it held this level perfectly. We mitigated 50% of our demand zone, and now we're getting some nice momentum, lots of liquidity built up here. So now next push up, pull back, you know, quite comfortable to kind of get involved in this. You can kind of see here as well, you know, lower time frame, when price came down, we were creating lower lows and lower highs. We kind of got to this area, we did this, and then here we kind of broke above. Yeah, we had a break above. This is a perfect entry. Change of character, perfect area of demand, aligns with our Fibonacci retracement, mitigate at least at 50%, and then after that price continues to push higher. Yes, we got some consolidation here, but overall you could see price just started to rocket to the top side. NZD CAD and CAD CHF. So CAD CHF, we never got a pullback. Now CAD CHF from higher time frame, you could see, you know, it's been just bleeding off massively. We have lots of inefficiency above, lots of areas of unmitigated supplies. We currently had our last daily break, so we got our daily high here, we have our daily low here, had this, and then kind of came down. Lower time frame, price is approaching this area of supply. Now can this area of supply act as a pullback, is what we'll need to see. So if we mark this up here, you could see we have that area of supply. So if price can come into here and then start to retrace and come back down into 0.65600, you know, you could lower time frame, you could look for shorts back down into here, or if price comes into here, then you could look for buyers back above, because we have created lots of liquidity below here. We have this perfect area of demand that's still unmitigated, and that would align with that pullback from this region here. Even though if price doesn't break above this, technically you could still say it's bearish, but because of how low we are, I think, you know, price is definitely due for, you look at it on the monthly chart, it's, you know, it's at all-time lows. So we could take lower risk and still look to continue pushing price higher, and I think we're going to start to see some weakness coming in for CHF with how price is moving. Hey Mills, NZD CAD was the other one. So yeah, NZD CAD, you know, we are in a pullback phase. You could see kind of been doing something like this, and then we had this push to the downside. So we have this current high, this current low. We look at that on a weekly, you could see price just tapped into that 70 to 79% and then started to retrace. So even if we look at price, where's the likelihood price is coming down to? 0.79, 0.79, I'll just call it, as a pullback area where it's filling out all of this inefficiency and imbalance on the weekly. So on the daily, you know, what does that look like? You know, we are internal, but daily we're seeing this. Price is respecting that. So we've created a new daily low. So what can we expect? We can expect a daily pullback. US oil. Yeah, no worries. I'll have a look at that. So we can expect a daily pullback. Now, you can see we have a perfect unmitigated area of supply on the daily that sits at 0.85. 0.85. Now, obviously we can't be too focused on the daily right now because the 4 hours still bearish. Now you could see we had this 4 hour break here, and then after that we've not really created any 4 hour structure, and you could see we have this perfect unmitigated supply that sits within our fib zone. Now if we start looking at this on the M15, for me personally, we really need to break above this high, because the last pullback we had was here, and then we kind of came down. We had this, but we never broke the low. Or did we? Very marginally. We broke the low. So price reacted to this, is reacting to this. So potentially, I wouldn't be, I would probably take lower risk and look for buys at this area of demand, which seems pretty good. You know, we are due a pullback. The only thing that I'm slightly cautious about is this low. We had this retracement. This, you know, we had a very, very marginal candle closure below. So it's a weak break below. So you just need to bear that in mind, that that's the case. But this does look pretty good. You know, we have had a daily break to the downside. 4 hour hasn't really created much. We have lots of imbalance and inefficiency above. M15 has been continuously bearish. So we could see a nice retracement. If price comes into here and it holds this area, then buyers could look good for this. US oil. So oil. So personally, oil is just, you know, you really want to see oil break above this and then look to continue. Reason for that is this was the daily pullback zone here. After we had this big push up and change of character, price has come down. It tapped into it once, pushed off, came back, created a new low here, retested. So you really need to see a break out of this and then look to trade this. I'm not keen on shorting purely because we had the daily change here to the top side, as you can see here. You know, now whether this was it was a very marginal change, whether this was a mitigation just to sweep all of the liquidity above and tap into this supply to come down, we'll need to wait and see. But we're kind of like in no man's land because it hasn't broken below, it hasn't broken above. So, but you could see we came down, all this was internal, we then created a new low. So, you know, we could just see price come into this area of supply and then sell off again. Because we had a breaker structure here. And then you have this supply that's unmitigated, that's sitting up here. So if anything, you'd probably be more inclined, if you see lower time frame rejection, of looking to short from this area back into like an area of demand. I wouldn't be looking to take shorts to break and create a new low, because you could see this is the daily pullback zone here and price is respected it multiple times, so we could continue higher. So it's pretty difficult because daily shifted bullish, 4 hours still in the pullback bearish. Price is failing to break below this zone. It has created a new 4 hour low, but it could then continue higher. So you're kind of stuck between the two higher time frame zones, which is, you know, they're conflicting. So you kind of don't want to be in that position. No worries at all. $1 o'clock. What do we have? How long is 30 minutes to NFP? Sorry guys, give me a sec. Sorry about that, I'm back. What's everyone's favorite pair to trade? Let's see what people say. Me personally, I would probably say I've traded gold a lot recently. Gold's been pretty well for me, but I don't have a favorite. I don't have a favorite when it comes to it. How's everyone's trading week been? Profitable week? Yeah, Nasdaq is on some. It's on a crazy tear to the upside with this whole AI tech stuff. You know, where's our next area of real supply? Pretty much here on the daily. Yeah, Nas moves good. It's just recently there's just been no opportunity to get involved, in all fairness. You could just see it's just push, 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 push non-stop. What's everyone's thoughts? You guys think strong news for the dollar or dollar crash? Yes, it's to do it because Nas is obviously built up off all of the tech companies and the whole AI thing that's been blowing out recently. That's why you got Nas tearing to the upside like that, and US 30 is the opposite. You know, S&P 500 again, it's moving, but nothing is moving like Nas is moving. Yeah, Bitcoin is like I said, I still feel Bitcoin is in a pullback. You know, we had the 4H break to the downside here. Then we entered this internal retracement. So I still feel Bitcoin is probably going to head up to like 29,000 before we see the next push to the downside. So all this is our internal price action. So we could definitely see Bitcoin pushing higher before the next move down. And as you can see, that supply zone sits perfect. And you can see we bounced into this area of demand. And we pushed off it nicely. So yeah, so I would say short term, still some bullish momentum before we see price pushing down. Question what broker you use? I have a couple. I use FP markets. I use Hanko Trade as well. And I also use Blueberry markets. I don't use Hanko as much, to be fair. Mostly I use FP markets and Blueberry markets. Remember guys, if you're new, hit the like, feel free to drop a chart and I'll have a look at it. Any questions you have, join our free Discord. Yeah, Hanko Trade is allowed in the UK. It never used to be, but I think it was a while back. Well, it definitely is because I have an account. Yeah, so I'm just going on this site. Yeah, United Kingdom. Yeah, it's there. Do any of you guys watch? You probably have if we're all in the financial kind of trading world. CoffeeZilla. Why do you use different brokers? Oh, you're talking about for charts. In all fairness, it's 6.5 a dozen. There's no real difference. I don't know. I kind of whenever I added them, I just added them all because I don't really trade any of the brokers that are on TradingView. So it doesn't really make a difference. Yeah, CoffeeZilla's amazing. He's so good. Have you seen his most recent video? He did that whole Logan Paul one with CryptoZoo, and then he obviously was AWOL for a while, and then he put out episode 1 yesterday of this new scam, which is basically like it's all to do with trading. Yeah, is that I thought as much. The Ted, is that Uncle Ted that what's his name, Roger Banks goes on about all the time, who he learnt from? Oh, that's crazy. I thought as much because when it was Ted, I was like, it just, how many Teds are you gonna find? And it just, and I think the other day somebody was mentioning it in Roger Banks' stream, Um, and I didn't take much notice of it, but when I watched the video yesterday, I was thinking, oh shit, that I think that is him. Yeah, exactly. Yeah, 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 yeah. Crazy, isn't it? Crazy. But CoffeeZilla's great. I love his production. I love his I love his his whole his whole production and how he goes about stuff. It just the content's great, but the way he puts it together is amazing as well. I typically did use Oanda, but for gold I switched because Oanda the other day it had a huge spike on gold, which was inaccurate. For some reason it was only on gold, so I switched. Um, but majority of the charts, there's no real difference. There's not going to be, you're talking of like fractions if there is any difference, which technically doesn't really make much difference when you're kind of trading or executing. Right, guys. Well, I'm gonna be off. I know the news is in like 15 odd minutes. I'm not gonna sit here as I'm not really trading the news. So, I've kind of given them an overview of what I'm looking at, what I'm expecting. If you haven't seen that, then just go back and watch the stream. Um, Weather's pretty nice, so I'm probably going to head out shortly. Enjoy my day. I caught my gold trade this morning, and then I'll just see what NFP does, and then wait for some setups to happen next week because it is Friday, and I don't really like to take any trades uh, and hold over the weekend, unless I'm not in some significant profits. But have a good day. Be safe. If you've made profits this week, don't lose them by gambling with news, and I'll catch up with you guys soon. Take care.